I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Tuesday, January 4th. We've got three markets for you today. Corn, soybeans are going to wrap things up with live cattle. We've got the March corn contract pulled up to kick things off, and it was a big day for the bull camp. Finished roughly 20 cents higher on the session, a big reversal from the previous 4 or 5 sessions after failing against technical resistance from 617 to 620, which goes all the way back to those July 1st spike highs. So the market getting back out above psychologically significant $6 is significant, and they did it with conviction today, which could put the bulls back in the driver's seat to get out above this recent high 617, 620. Above there, the next technical resistance really doesn't come in until about 12 or 13 cents higher in that mid 630 level. And as far as the RSI goes, or the relative strength index, we are down here at about 60 still, so far from being overbought. Technically speaking, anything over 70 is where you start to be in overbought territory. The market may be a little bit more extended. So as you can see, the technicals, we're seeing higher highs and higher lows. So the bulls in the driver's seat for the time being. A break and close back below these recent lows in the mid 80s could mute some of the bullish technical landscape that we've seen developing here since these August lows. Now moving over to the soybean market. Soybeans, early in December we talked about the inverse head and shoulders forming, and that's exactly what is transpired here, taking us back towards these July highs up near that psychologically significant $14 handle. However, we thought that the market would maybe trickle a little bit higher and give us more tradable opportunities on both sides of the market. So we did move our bias into bearish territory a little bit too soon or prematurely. But up at these technically significant levels and psychologically significant levels, I think there's opportunity to look to the short side. But as we've learned over the last year and a half, or even 2 years, this market can be very irrational. We can see some big swings. So there's a lot of different ways to give yourself some exposure with limited risk, as opposed to just being outright long futures or short futures, etc. So if you want to talk strategy, please give us a call at the trade desk. We'll be more than happy to help you out. So speaking of this $14 level, that's going to be resistance, a big area in a battleground area between the bulls and the bears. A breakout above there probably takes us to contract highs, which goes back to the June 7th highs, which comes in near 1445.5. So a lot going on in these markets. We expect the intraday swings to be wide and the volatility to remain persistent through these first couple weeks of trade. Now, moving over and wrapping things up with live cattle, we've got the April contract pulled up here, and we talked about the bullish seasonal at the beginning of December, started December 9th and went through January 2nd. That was profitable for 15 out of the last 15 years. This year marks 16 out of the last 16 years, and we talked about this in the recent livestock commentary that we send out each and every morning, that we're reducing long exposure and even looking to the short side, especially for those who need to hedge over the last couple of sessions. Today we got the big move lower, and I suspect a lot of that was unwinding of that seasonally bullish trade. We did start to reduce some of that short exposure with clients near this trendline support near 142. So I wouldn't be surprised to see this 142 area hold on the first test, but a break and close below here probably takes us back towards these end of December lows and a little bit closer towards that psychologically significant 140 level. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.